This unit is divided in two parts: accounting and financial management. This first part, I will talk about, some accounting concepts. And the second part, well, the first part is more about the Awqaf features and the operations, and then I will cover the accounting concepts in the second part. So I'll start with the Waqf features and the operations. Awqaf institutions, Awqaf organizations, Awqaf societies, etc. They are all different names for the entities that are classified as Islamic charities or not-for-profit establishments. They come in different structures, and they include government agencies in Muslim countries and non-government organizations in others. Some are incorporated, some are unincorporated associations. Their work includes a vast variety of religious and social, cultural, and economic activities. Many of them achieve significant outcomes in education, in healthcare, in human development, and even in recreation. Their business operations include commercial activities, which includes real estate, agriculture, trade, and industry. Now, there are common features among the Awqaf organizations. An Awqaf organization can be classified as a Waqf entity when, first of all, it has no title or ownership rights of assets, and it has custody. Instead, it has custody or trusteeship over the assets which form what is known as the corpus of the Waqf. It obtains its equity capital from contributions in the form of endowment, land, building, and other long-lived assets. Its operating purposes are to provide social services. It manages assets, generates and distributes cash flows as prescribed in the Waqf deed. Its stakeholders of Waqf organizations include the donors, or what are known as the waqifs, the nazirs or the mutawallis, trustees, the managers. The beneficiaries are also, of course, the main stakeholders. Clients who use, the assets of the Waqf, employees, volunteers, and we can say even government is a stakeholder. The regulations or the bylaws of a Waqf organization are usually stated in very broad terms to allow maximum flexibility. It has a flat organization structure, so it means there is low hierarchy in an organization, in a Waqf organization. The financial objectives are expressed in quantitative terms, because in money terms, but the operational objectives are usually expressed in descriptive forms, because Awqaf social services are often intangible and they are difficult to measure. Therefore, the descriptive form is really the way that the services are evaluated. Types of Awqaf. As you can see in this diagram, the Awqaf are grouped into three different categories. The first one, we have the religious assets, and these include mosques, madrasas, Quranic centers, cemeteries, shrines, etc. The other group, they are residential assets. They are investment assets, which include residential buildings, commercial buildings, agricultural land, industrial factories. Some of them are Awqaf. And of course, investments, which include financial securities and cash. And then the third group include they are what are classified as social assets. Schools, universities, hospitals, clinics, orphanages, elderly homes. These are all considered as social assets that Awqaf can also have. Now, the revenues generated by the investment assets are usually used to support the other two categories, the religious assets and the social assets. Now, Awqaf is a socio-economic sector. Awqaf now is a voluntary sector, which is unlike zakat, which is obligatory. Awqaf is basically an ongoing charity, sadaqah jariyah. Awqaf is also an economic sector. Awqaf importance as a social sector can be seen through its social mission, its expenditure on welfare and community development, on social services. Awqaf importance, on the other hand, as an economic sector is seen in terms of the huge assets it controls, in its significant investments, in its massive social expenditure, in the number of employees and volunteers who work for Awqaf, and in its significant contribution to the economy, which sometimes accounts for, up to, I would say, up to 10% of the GDP of some countries. Usually, most contribution ranges between 3 to 5% of the GDP, but I have seen that in some countries it can go up to 10%. Awqaf contribution is actually more impactful than it can be easily measurable. Performance cannot be justifiably measured purely by financial indicators such as return on investment or return on assets. In many cases, the social return weighs more than the financial return. Awqaf, by its very nature, is a growth sector because, assets cannot be sold, they cannot be disposed of, therefore, an asset comes on top of another asset and so on. And therefore, it has a cumulative feature, and at the same time, it will have a huge potential. Awqaf management I'll talk about trust and custody services. Awqaf trust or the Mutawalli service is the most important aspect in the management of Awqaf. The trustee or the Mutawalli, the Nazir, has the custody and management responsibility of the Waqf and is held accountable to the Waqf and to the beneficiaries and to other stakeholders for any mismanagement or for negligence. And in some laws, actually, he can be, the Nazir is considered as an agent, and therefore the laws of agency may apply to him, and he can be penalized according to those laws if there is any shortcoming on behalf of the Nazir. The Waqf Nazir, first and most important responsibility is to protect the assets under his control and to develop them and to make sure that he can get the maximum return if they are investable assets, and to collect the returns and to distribute them to the beneficiaries or to the programs as prescribed in the conditions in the Waqf deed, the conditions or the conditions of the Waqf. The individual Nazir, if we are talking about Nazir as a person, now he's required to be an adult, a sane, rational, independent, honest, just, and he should be a capable, rational person and not under any legal constraint. He should also be qualified and experienced in managing the portfolio of assets he's controlling. Therefore, in this case, it is difficult to separate the Nazir's personal, moral, and ethical attributes from his qualification and managerial expertise when he is performing his duties. Okay. The Awqaf Management Trust and Custody Services. I mean, we talked about the natural Nazir. Now there is the corporate Nazir. You see, this comes from the perpetuity of the Awqaf assets. It brings in issues of succession, and it highlights the need for the corporate Nazir because a corporation has an indefinite life, and therefore the issues of succession planning and so on are automatic. Now, while a Waqf can be managed by an individual, the corporate structure has many advantages. An incorporated entity, first of all, has an indefinite life. It has a board of directors. It allows segregation of duties. It allows for pinpointing responsibilities according to areas of specialization. A corporate entity can select and direct staff and volunteers. It sets goals, and it can inculcate the ethos of Awqaf. It can link staff remuneration and volunteer rewards to performance and productivity. A corporate Nazir also can facilitate joint oversight of a Waqf if required by the Waqif or his successor. The Sharia allows the Nazir to be remunerated from the return of the Waqf. A percentage that ranges between 5 and 7 is considered, reasonable, and that's what many Nazirs have. Also, a fixed amount is also permissible, provided it is within the market range for similar size waqfs. Financial management, control, and audit. The priorities and objectives from management of Awqaf are different from those of the commercial sector. Now, whereas the priorities of the commercial sector are profit maximization, increase of market share price, cash flow, dividend distribution, reduction of the cost of capital, and so on, Awqaf has different priorities. The first priority is protection and the stewardship function and development of Awqaf properties and enhancing their productivity or utilization. Adherence to policies and regulations is another objective, abiding by the Waqf deed and the Sharia and the conditions of the Waqf, assuring beneficiaries that their rights are protected, ensuring that management and investment processes are being handled properly and professionally. Financial management also serves to assure and motivate donors and benefactors to donate and to establish new Waqf and expand the categories and numbers of beneficiaries and social programs. Now, Awqaf should be subject to audit, and there are 3 types of audit. The first one is the Sharia audit. Now, the purpose of the Sharia audit is to make sure that the Waqf organization is complying with Sharia in all its dealings, and to uncover any breaches of the Waqf deed or conditions of the Waqif, and any moral or ethical pitfalls, and to recommend corrective measures. The financial audit, this is another type, the second type of financial, which is also important. Now, the purpose of the financial audit is simply to make sure that all the assets are properly accounted for, and all monies, revenues, and donations are collected and properly accounted for, and that all costs and expenses are paid and distributed as planned and approved, and all benefits are distributed as stipulated. The third type, the management audit. The management audit evaluates the Nazir and the management team and its effectiveness in measuring the Waqf and the extent to which management is working in the interests of beneficiaries and delivering on its social mission. Okay, that was the first part, about the Waqf organization and its mandate and, its working and its structure. Now, in this part, I will talk about accounting concepts for Awqaf. I will talk about concepts. I will not talk about the debit and credit and what financial statements and so on. This may come in a separate lesson later on. So the first is valuation of Waqf asset depends on a number of factors, including the type of the asset, value, state of repair, conditions of the Waqf, any restrictions, caveats, or any liabilities. The financials must be accounted for in accordance with recognized accounting standards such as the IFRS and also the general accounting and auditing principles. And now we have also accounting principles which are or accounting standards which are established by or set by AWFI, the Accounting and Auditing Organization for Islamic Financial Institutions. Now, one might ask why we need to evaluate Awqaf assets, considering that they were donated in the first place and they are free from any form of restriction or encumbrance. The answer is that these assets have a worth. You know, they have a value, they have a market value. And asset preservation means also preservation of the value of the asset. Also, asset valuation establishes and enables proper valuation of the adequacy of the return on the asset. You see, if we have a certain return, we always tie that return to the value of the asset. And therefore, although the asset is donated and so on, still must have a value so that we can really measure the adequacy of return in respect of that value. Okay, fixed assets such as land, plant, and equipment should be recorded on receipt at their appraised market value. Awqaf liquid assets such as cash, waqfs, marketable securities, shares, and sukuk, and any such investments, and any donations that may come should be recorded at their nominal or market value. So cash usually is recorded at its nominal value, how much money we have received, and the securities then we are evaluated at their market value. Now, if the cash comes in a different currency to the local currency, some donations may come, let's say, from other countries in let's say in US dollar or in euros or whatever. Now these should be recorded at their value on the date that they are received. And if they are not exchanged and they are kept in their original form, in the currency they come in, then they should be again evaluated at their current value on reporting date. Okay. Depreciation and amortization of Awqaf assets. It is recognized that tangible assets, except land, all tangible assets, i.e. property, plant, equipment, they deteriorate and depreciate over time as a result of their usage or as what is called normal wear and tear. Obsolescence is also a factor. So the depreciation of an asset means reduction in its value, and this value reduction must be recognized and accounted for periodically in order to adjust its book value. And number two, to match the reduction cost to the revenue generated by the asset. Say if an asset is generating a certain amount, but it's losing its value on the other side, therefore the reduction in value, is matched or contrasted with what the return comes. And also it helps to create, this depreciation factor. It helps to create a reserve for eventual replacement. This is another reason for this depreciation accounting is compliance with the generally accepted accounting standards. Awqaf accounting standards, FAS 37, require Waqf and similar institutions to apply an annual depreciation charge on Waqf fixed assets. There are 4 factors to consider when depreciation is charged. First, the asset cost. It's the asset useful life, its residual value, and the depreciation method, whether we are doing depreciation by straight line or in any sum of digits, or there are so many other ways of calculating depreciation. Depreciation and amortization of Waqf assets. Assets are classified into 3 broad categories, and depreciation is applied as follows. Well, first of all, according to Saudi Arabia's accounting rules for Awqaf, an annual depreciation charge should apply on Awqaf fixed assets on the basis of a specified percentage, where fixed assets are classified into 3 categories. Land, there is no depreciation, is applied to land. Property, plant, and equipment, which and these are other depreciable assets. These include, let's say, building, machinery, equipment. They are depreciated on the basis of a fixed percentage, to them straight line depreciation method, according to specified rates for each category. For instance, buildings are depreciated at 2.5%, which is equivalent to, the buildings are depreciated over 40 years, and this is a normal rate, which equates to 2.5% per annum. Machinery and equipment, the depreciation is charged over the estimated useful life of that equipment. Accounting for cash waqf. Now, there has been, first of all, I will make this small introduction. There's been a debate among scholars, Sharia scholars, on whether cash can be made as a waqf. Those who argued against the waqf, against the cash waqf, their argument was that the benefit of cash results from spending it, much like the benefit of food from eating it. And therefore, anything that is consumable cannot be preserved, and therefore it cannot be made as a waqf. But the latter day Maliki scholars and the Hanafis and the other scholars, they have ruled in favor of the cash waqf because of the ease of its transfer and its use as a measure of value and a medium of exchange. And also, cash is recognized as an investable asset, and therefore it can be made as a waqf. Moreover, the cash waqf can be utilized in two main applications. First, the Qard Hasan, or the good loan, or the beautiful loan. And this is to help alleviate poverty and to provide for dire circumstances such as medical treatment, tuition fees, marriage costs, or other emergency needs. And number two, they can be invested, cash can be invested by way of murabaha or musharaka, where the funds are deposited in such investments in Islamic banks, let's say, and the proceeds are distributed to beneficiaries in accordance with the conditions of the waqf, so that the corpus of the cash is invested, and what is distributed is the return that comes from its investment. Cash can be recorded on the day of receipt at its face value. If the cash, as I said, is in foreign currency, it should be recorded at the exchange rate ruling on the date of receipt, and the value can be adjusted to reflect the value of the foreign currency at the rate ruling on the reporting date. Gains resulting from exchange in value can be booked to what is called in accounting an exchange equalization reserve account. And this reserve account is used to as a buffer for when there is a drop in the value of that foreign currency. This is another area, accounting for volunteers and pro bono services. See, the problem is many organizations, they do not account for volunteers. Although because volunteers are not paid and so on, but irrespective of whether you pay them or not, they are at the same time giving you value in their services, and therefore there should be some form of accounting. I'll discuss this. Well, first of all, Awqaf is a voluntary sector built on charitable donation of assets and mostly on voluntary contribution of services. In Awqaf, people volunteer for different reasons. There are people who volunteer because they see it as a way of getting blessings from Allah, and others because they are passionate about a certain cause for which Awqaf is providing, and others because they are passionate about the cause of which they volunteer. People just like to provide services. There are also those who want to give back to the community or to contribute to the common good. Now, many volunteers and professionals, they provide or perform their services free of charge or at a discounted rate without expecting any remuneration. This makes them a valuable resource for Awqaf. Although volunteers represent an economic unit, their contribution, benefit, and impact are rarely accounted for and reported. Most Awqaf organizations do not know how to monetize the value of volunteer services. However, Some services should be recorded as defined in the Generally Accepted Accounting Principle, GAAP, especially if the service provided would typically need to be purchased if not provided by a volunteer. So, if there is, for instance, a professional service that you need, and you know how much it costs to have it done. Now, if it is provided for a volunteer, maybe you have to record that I have received services worth that much. To help Awqaf to record the value of some professionals, a normal invoice for the service, they may ask the professional to issue an invoice for the service and then show the deduction for the Awqaf. For instance, they can say, all right, this service, they issue an invoice for the full service and then they show the discount and what the Awqaf has, the net. A special discount for Awqaf is so much, so Awqaf knows how much that volunteer, value that they have received. Okay, or for instance, they could give, they can put the total amount and then they deduct the whole thing and show a zero, but at least Awqaf knows the value of that volunteer services that was provided. Some goods and services should be recorded at their current market value if the assets are donated or the service is donated, and a corresponding revenue from that service should also be recognized. Principle of income recognition. Now, I would say most Awqaf organizations do not know or do not generate income in commercial sense. Based on the type of the underlying asset, Awqaf income is divided into three different categories, First, there is the restricted income that is generated or received on condition that it will be used for a specific cause or paid to designated beneficiaries. So this is a restricted income. So if somebody donates an asset and he says, for instance, a building, he says, but I want that building, the rental that is received from that building, to be paid to, let's say, orphans or to widows or whatever, then this is considered as restricted income because it can only be disbursed to that particular category in accordance with the conditions of the Waqf. And there is another type which is less than restricted. It's called temporarily restricted income, which is income that is generated or received conditional to temporary restrictions. Example, you could say, I will pay for this student until he graduates, or I will provide for this widow until she remarries. So these are incomes that are restricted temporarily. And then the third category, there is the unrestricted income, which income that can be used at the discretion of the Waqf Nazir or the Mutawalli for any legal purpose appropriate to the mandate of the Waqf organization. A major part of Awqaf revenues, most of them are restricted income, which must be recognized as liabilities when they are received. You see, the income that is received by Awqaf is not, recording-wise, it's not Awqaf income. It is a liability on Awqaf because they have to pay it out. And therefore, this is the difference between income received by a Waqf and income received by a commercial organization. The recording should be treated differently. Different views still exist in relation to the appropriate treatment of donations, operating grants, and whether they are to be recognized as revenues, liabilities, or cost recoveries. There's been a lot of debate even in Awafi when they were setting that standard. Waqf income, or what they call ghalla, should be declared, should be booked as a liability when it is received or when it is declared. You see, even before receipt, if it is declared to you, then you can book it as an income, so that, you know, on reporting date, you can show what was due to you during that reporting period. Now, differences in accounting treatment between, let's say, a Waqf organization and a for-profit company or a corporation. Now, other than the lack of shareholders, it is often difficult to tell a Waqf organization from a for-profit organization, especially those that are in the marketplace and undertaking commercial activities. However, the fundamental difference between a Waqf organization and a commercial organization or a commercial company is the mission to provide a social service. Now, in the table which you see in front of you, it highlights the major differences in accounting treatment and reporting requirement between a Waqf organization and a for-profit company. First, the owners. Awqaf does not have any owners, but a company does have shareholders. The primary mission in Awqaf, it's social, it's charitable. The primary mission in a for-profit company is to make money, make profit for its shareholders. The financial objectives in a Waqf organization to ensure that the revenues are greater than expenses in order to maintain the service. Okay. In a commercial company, the financial objective is to provide goods and services and to maximize profit and shareholder value. The main financial statements requirements for a Waqf organization: statement of financial positions. These are the statements that we need. Statement of financial position, statement of activity, statement of cash flows, and notes to the financial statements. For a profit company, you need the balance sheet, income statement, statement of cash flows, and also we need notes. They need notes to their financial statements so that, you know, the numbers behind the numbers in these statements are explained, how they were arrived, and what are the, you know, the conditions under which, you know, they were received, and so on, and competition and whatnot. So there should be some notes. Assets, well, they are in a Waqf organization, they are held in trust, they are off the balance sheet. Now, in a for-profit company, they are owned by the company and they are on the balance sheet. Examples of revenues in Waqf organization, they come from contributions, donations, grants, fundraising, and investment income. Okay. In a company, they come from the sale of goods, sale of services, investment income, and also capital gains. Revenue processing. In a Waqf organization, they are classified by purpose and Waqf restrictions. For a commercial company, record as income by a profit center. Disbursement processing. In a Waqf, there are the disbursements. The payments are made according to the Waqf conditions. And in a corporation, the payment of revenue, the payments are made for, they are called revenue expenditure or capital expenditure. Issues of sustainability and profitability. Now, the distinction between sustainability and profitability is false. This is the first statement I'd like to make, because there is a misconception among some that because an organization is a Waqf, it should not seek profit. You see, some stakeholders see that there is a conflict between Waqf as a not-for-profit sector and the pursuit of growth and profitability, and that the Waqf organization should be a break-even organization, or it should, in other words, it should distribute the surplus if there is a surplus, because they say this money belongs to the beneficiaries and therefore it should be distributed, and the Waqf organization should not retain anything. Awqaf's concern should be more for asset custody and preservation than the issue of profit and loss. This is what some people think about that. And that perpetuity emphasizes ongoing viability rather than pursuing short-term profit maximization. However, responsible Awqaf organizations do try to have profitable operations to ensure their long-term sustainability and their ability to realize their mission into the future. Now, like all entities, Awqaf have to generate revenues to fund their operations. This raises the question, shouldn't Awqaf be profitable in order to be sustainable? And this is why I say in the first place that this dichotomy between sustainability and profitability is false, because you need to be profitable to sustain yourself. But you see, they have to maintain a balance between financial objectives and operational objectives. Okay, you want to be profitable, but you as a Waqf, but at the same time, your objective is not profit. You have to maintain this balance between your financial objective and your operational objective. Otherwise, you will become a commercial organization if all I want as a Waqf is to increase profit and so on. On the other hand, if you are concentrating only on the operational objectives, you will soon find that you are unable to sustain yourself, and your long-term sustainability becomes, an issue for the future. and you may not be able as a Waqf to realize your mission for future generations. This is what I have for this lesson. I hope it's all clear. And later on, if there are any questions, I will be very happy to provide answers to the extent I know. Thank you very much, and we'll see you next time.